2018 had some enormous drops in the market, and the market as a whole for the year slumped. And so, looking at the data, so we have the chart here for the entire year, and we can see there were some sharp declines in early 2018. Going over the numbers, the peak happened early in the year. You can see there was still an ascending market cap, and then at January 7th we peaked at 831 billion total market cap, and then from there it was all declines. From January 7th to the 11th there was a 22% decline. From January 17th to so from January 11th to the 17th, there was another 28.4% decline. So looking right here, it was from here and to here. We had those two large declines. And then the market did rebound right here. So we saw a 25% uptick, and then it went right back down. So somewhere along here, right in this valley to that valley, we had a minus 46% drop. And at that point, that marked down 62% for the year. But then we had a rebound to here, and that was a 63% rebound. And then we had another drop to another 17% drop, and then another drop from February to March of 34.6%. So for the year, we saw that there was never a spike back. So for the year, it just tapered off into ultimately we had a minus 84.5% for the year for the total market cap. So at the peak for 18, we were at 831 billion, and by the end of the year, December 31st, we were at 128 billion. So depends on what your time frame is for a crash. But that whole year was just was a horrible year for crypto, and a lot of people were writing off crypto at this point. Now moving into 2019, wasn't nearly so bad. From the peak from when I started, from the peak of the year, I think we're at, what is this, 371 billion, to the lowest point in September 26th. So I think we're right here, or near lowest. We were minus 42.6%. The biggest drop was minus 28% from July 19th to July 16th. And then there was another drop from September 23rd to the 26th, and that was 19%. So not too many sharp drops in 2019. You can see these graphs are all looking completely different. 2020 was it was just a boom for the crypto market, and the only drop was right here. The only real drop was right here, and this was actually the market dropped from 263 billion to 141 billion. And that marked a 46% drop. But for the year, when we look at from March 7th, which was let's see, where's March 7th? March 7th right here, 263 billion to December 31st at 761 billion. That was a 436% increase over the total year. So the market was way up in 2020. Not a lot of drops, mostly just everything going up and looking good. And then in 2021, we're familiar with it. We have seen 2021 has been another great year. And I did not figure out the total, what we're up for the year since right here, but I can tell you that we did have a few decent sized drops. We've had from February 21st to the 28th, we had a 22% drop. From April 16th to April 24th, we had a 20% drop. We had a 47% drop from May 11th to May 23rd. And that's probably right here. So that drop marked 47.3%. And then on September 6th, I think that's probably right here. Yeah, September 6th, this valley right here, we had a 24% drop to September 21st. And then from November 9th, which was our peak, we've dropped 17% until the day this video was made. So that gives you some historical context on what drops we've had. And the reason why I pieced this video together was because I'm trying to figure out at what point am I buying in. Right now, I think there will be a crash, but it won't be the big crash. It will be the setup crash for 2022's. I think Michael Burry termed it as the mother of all crashes. So we'll have a setup crash, and then the market will go up, and then we'll have that large crash in 2022. So, but I do think after this initial crash, we'll go back up. All speculation on my part. Point of this video is now you're aware of what these percentages declines were when we've had these crashes. And if you look back to 2018, the whole year was just a gigantic crash, 84.5% down from the year. But we have seen within a month span, we've had as much of a 62% drop.